I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Saudi Arabia and Canada having a spat over human rights. The Saudis suspending diplomatic relations with Canada, kicking our ambassador out. And you said they also posted a very disturbing tweet. What was it?
Well, it was a threat of terrorism, basically, showing one of the big buildings in Canada with an airliner heading towards it with some sinister message like, this is going to happen to you or something if you keep this up, basically.
Well, I mean, Canada doesn't do a whole lot of trade with Saudi Arabia, but we do bring in over 80 million barrels of oil from Saudi Arabia. Eastern Canada depended on that oil because they refused to let a pipeline be built from Western Canada to Eastern Canada. Maybe they'll change their mind about that. Well,
you know, in a way, Saudi Arabia is wasn't really thinking about talking about this, but it's an interesting country in one sense because their stock market actually has done very well this year. It's there's an ETF KSA for Saudi Arabia. It opened the year at 25 and it's all the way up at 31. It may be the top performing single national stock market in the entire world, but of course it's been helped by the rise in oil prices. And the thing is though, in the long term, it also was included in a big international tracking index that forced a lot of funds to buy some of these Saudi stocks. But in the long run, I don't really know what the future is of Saudi Arabia. They're fighting a civil war in Yemen, and in the 60s, when Nasser did that, Egypt actually invaded Yemen. They lost that war, and also Saudi Arabia has reached peak oil on their oil fields, and they're trying to transition into a new economy of trying to become like a global hedge fund and arms producer, but really a global hedge fund. And when they do a tweet like this threatening Canada, I think as an investment perspective, that has to make people raise their eyebrows, because if they're not going to be, if they're kind of shady, then who's going to want to invest there? Why should we treat them as some great global financier and so forth? And the Aramco IPO has been delayed for 2 years, and now there's talk it's going to be shelved because they're unwilling to do full disclosure on their investing and their accounting and who's invested in it and all these kind of things. So that's another sign that maybe Saudi Arabia isn't a great investment. So I would just say that tweet is evidence that this ETF has run up quite a lot this year, KSA, and there are a few people talking about how great Saudi Arabia could be as an investment. But I think this news today is a reason not to invest there, frankly.
Looking at places that are good to invest, if you're looking at some foreign country to invest in, where would you go, Mike?
Well, it's interesting because a lot of the global markets are actually declining already. They're below their 200-day moving averages. There's an ETF for the emerging markets, EM. It's below its 200-day moving average and quite a bit below it. The Chinese stock market is like that too. So is Asia. Europe is right on the moving average. The U.S. stock market in Saudi Arabia really are outperforming the rest of the world. And these markets, a lot of them, I think, have tipped into bear markets this summer. We spoke a few weeks ago about the global yield curve. If you strip out the U.S. and look at what the bond markets are doing around the rest of the world, it's already inverted, saying that the global economy is going to go into a recession in the next 6 to 12 months. Now, to me, that tells me not to invest right now, but if we're patient, there will be a great opportunity probably next year to invest and pick out some markets that are cheap. And one that's on my radar screen is Vietnam, because from a comparison standpoint, if you look at the valuations using the cyclically adjusted PE, the Vietnam market really has a cheap valuation compared to the rest of the world. Russia does also. So those are two situations that I would be looking at as a future place to invest.
How has the Russian stock market been lately?
Well, it had a tremendous rally last year, but in the years before last year, it was in a bear market. I think it was 2015 or in 2014. There were big drops in the Russian stock market. The Russian ruble also had a big decline, and we've come back basically from that period of turmoil in their economy and recovered with their financial market. And right now, the Russian stock market is basically even year to date, almost exactly even, not even up or down a percentage. I'm looking at the RSX ETF. So that's actually a good sign, because compared to many of the other world markets, the Russian stock market is basically up while many of the others are down. So it's doing okay, but as I said, I want to be patient for the next 6 to 12 months, but it's definitely hanging in there.
We'll have more with Mike Swanson right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, is there any big moves in gold juniors right now, or gold miners a better bet? What's happening in that gold space?
Well, we've almost seen gold, and we've seen basically gold fall almost every single day, or at least it feels that way, since April. I'll give you, we're now around 1,200 on the price of gold. We went up to briefly touched the 1360 level back in April, and now we've had a big drop down to what is long-term support. And in the futures market, the commercials have vastly reduced their short exposure, which is a bullish sign because they're kind of contrarian. When they're really short, you want to be scared, and when they reduce their shorts, that's good. It doesn't mean we're at the exact bottom right now. I could see us briefly going through 1,200 in the coming weeks, but I wouldn't be concerned if that happens because of what the commercials are doing. However, the mining stocks, they've acted stronger than gold for the really almost 2 years up until really this week, which is okay. It's not that unusual. So we're seeing a bit of a dip in the mining stocks. It's probably going to turn into a bottom this month. But part of what's happening is that some of the major gold stocks and the large producers are getting hit pretty hard. And one stock that's really been falling is Barrick Gold Mining. It started the year at $14, and as we're speaking, it's right below 11. It's down over 2% today, in fact, and it heavily weights the GDX. It's the biggest gold stock weighting the GDX gold stock ETF. So it has a big impact on the ETF. And why this stock is declining in particular is this morning there's a front page story in the Wall Street Journal detailing that there's been turmoil with the Barrick as a company, that there's a new CEO appointed a couple years ago that had no background at all in the mining industry. He came from one of the big banks, I think it was Goldman Sachs, and had a mandate upon himself to reduce costs, reduce debts, and focus on cash flows. On the face of it, that sounds great, but one of the results has been that the production for Barrick has been declining. The number of ounces being produced, they've sold off producing properties to reduce debt. Now the balance sheet is definitely clean, but the thing about mining stocks is that when you have rallies in gold, people really look at the future potential and trade the mining stocks as a proxy in gold. They want to see increases in production. They want to see increases in ounces of gold in the ground, metal in the ground, and so forth. And this is not what Barrick is delivering. And that's been impacting the mining stock indexes to the downside. While some of the mining stocks, such as Newmont, and I got, for disclosure purposes, I own both Newmont and Barrick, but Newmont has been outperforming Barrick. Franco-Nevada, which I also own, has been outperforming Barrick too. And the junior mining stocks have really not been declining in any substantial fashion over the past couple months as this pullback in gold and the gold stocks has happened. They actually fell overall in the first half of the year and are basically trading sideways. So the gist of this is that, yes, I do think there is an opportunity to buy the right junior mining stocks because they're holding up while gold's falling, while the gold stock ETF GDX is being dragged down thanks in part to Barrick Mining. And at some point we'll see a washout in the gold stocks. The price of gold might probably have to fall below 1,200 briefly to get a final bottom. And then we should see a rally back up, and the juniors, should do pretty good because I really think the risk in them to the downside was pretty much taken care of in the first half of the year. And most of these junior mining stocks are at cheap valuations, and they've been at a cheap valuation even last year when stuff went up because historically most junior miners, even if they're just pure exploration companies, have market caps around the $25 million mark, and most of these things are like in the $5 to $10 million mark. So we've never really seen real excitement in the junior mining space. Even since the bottom of 2016, we saw what I would say was a recovery rally, but not a real bull phase. And with the speculative stocks, we have seen, of course, last year, a big move in Bitcoin blockchain stocks. And then when that died out, we saw big moves in marijuana stocks on the venture exchange. And I think those marijuana stock moves are they could be reaching their end point. We'll know, let's say in the next couple months, by what these stocks do. For instance, Canopy Growth is going sideways. Most of them are going sideways. I'm just going to use this one as a symbol in particular. But they've been going sideways now overall since January, and we'll know, is this a consolidation or a top, by what Canopy Growth does. If Canopy Growth falls below its 200-day moving average, then I'll say it's a top. But if it breaks out above its high of June, then yeah, it was a consolidation and we're heading for another run. But the important thing is for the junior stocks is if this is a top in marijuana stocks that plays out into the end of the year, then a lot of that money in the venture exchange will go out of the marijuana stocks just as they've gone out of blockchain and Bitcoin, and they'll flow into the junior mining industry. So we're kind of in this, I would say, a dull period with juniors. Nothing is really happening. They already fell. They're just floating around. No one really seems to care about them, or they're asleep on what's going on in them, and people are excited about marijuana stocks. But all that could change by the end of the year, and we got to be on top of, keep our eyes on these different markets to make sure we see that moment when the money starts to shift. And I think that will definitely happen before the end of the year at the juniors.
Mike, I was just thinking, with Canada legalizing recreational pot October 17th, do you think some countries like the U.S. and Saudi Arabia are looking at Canada as kind of a rogue nation?
Well, probably some people are thinking that in Washington. I mean, Jeff Sessions has publicly made all sorts of comments about marijuana. Of course, I don't think the Saudi Arabians like people smoking marijuana, but it could be part of it. But it's strange in the United States because there are states, of course, that have moved towards legalizing marijuana, such as in Colorado, and it's probably a matter of time where it spreads to most of the rest of the country. But Canada is definitely at the cutting edge of that. But I do think there is more to that than just marijuana. For better or worse, Canada has more spending on things such as healthcare for people. They have higher taxes on income tax as a result of that. And I'm not trying to say this is good or bad. I just want to make the argument that the Trump administration is against those programs, and so is the Republican Party. So in that sense, Canada and Europe are seen as countries or areas of the world that have diverged from the policies that we think, or the people in Washington think, are right for the United States. And marijuana would just be another one they would add to the list.
We'll have more with Mike Swanson right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, anything going on with uranium right now?
Well, it's, the uranium stocks, it's sort of like the junior mining stocks. They're just kind of floating around. There's an ETF for uranium, URA, and it's almost, it's at 13, and it started the year at 1175, but it had a tremendous run up to 16 and is now basically going sideways. And Cameco is kind of doing the same thing. We're seeing really a pullback in a lot of commodities, and I think the uranium stocks are basically kind of getting caught up with that. For instance, copper stocks have been pulling back. Rio Tinto made a high in June and has been pulling back ever since then. And I think the uranium stocks, copper stocks, and so forth are likely to put in a bottom, if not be in the process of doing so this month when we finally see gold, stop, go through 1200 or whatever and start to go up. So I think, we're probably going to see these things make a critical low sometime in the coming weeks.
In other areas, Elon Musk now says Tesla might go private again, and is this just a trick to boost shares?
I think so, because he says things almost every day to boost the shares up with promises about the future. But if he's going to go private, he's got to find someone willing to buy the stock, knowing that they're buying a company with massive debts, over $10 billion in junk bond debt. And I don't know who in the world would do that. However, today there was a news story that Saudi Arabia has bought over $2 billion worth of stock in Tesla, and it could be that this is all some sort of pump job to get the stock up. And it is indeed up 7% today. I would note that I do think this year is going to be very interesting for Tesla. And I think, this is probably the final rally in Tesla. So one of the things he has done is created the expectation at times for events to occur that seem to be bullish for the stock and the company. But they are really masking the fact that the debt load is just growing and growing and growing and is going to continue to do so in the coming years. And I think is ultimately going to drive the company into bankruptcy. Now, in June, going into the earnings report, in June, let me see, what month was it? May, I'm sorry. The earnings report in May, going into that event, he was making statements that, we're going to produce, 3,000 cars a month of these, and then that's this target, and people said, no, you were not going to do it. And he jimmied the production line to get it done. He put out some cars and that he said were done, that weren't done, had to bring them back in to get them repaired, and kind of skimped on standards to hit the target. But he hit the target, and that helped the stock go up. And then, in August, he, touted this fact some more and had a conference call where he didn't go berserk on people, and so that was seen as a victory. But what he's now saying is that he's promising that he's going to have positive revenue in the next quarter, and that's going to make it seem as if he won't have to raise money again. And there's been some stories out that the way he's going to achieve this is by doing some accounting gimmicks, and hit that, but it's probably just going to be a temporary quarter. So I think we're heading for that, what might be the last, hyped up earnings report, when it comes this fall for Tesla. And I think they're doing everything they can to, take advantage of that, rally the stock up. And so I'm watching that, moment in a couple months to probably re-enter the stock from the short position. I shorted it in March, got out, right at the beginning of June, and just been watching it ever since. And it is really one of the craziest stories I've ever seen in the financial markets.
Yeah, well, it's so interesting when we talked to Wolf Richter, and he did point out that, they cranked out tens of thousands of cars, but over 18,000 of them really were not serviceable.
Yeah, they're just apparently just sitting in the parking lot.
Yeah. So they're there, but you can't drive them. It may not have a steering wheel or a left wheel or something.
It's crazy. But he has issued statements, it's just craziness. Back in March, the accountant resigned, and then the next day he talked about he wants to make a rocket to go to Mars. And now, like you're saying, he's talking about, I want to take the company private. Which is, good luck with that. Who's going to spend $10 billion on a company with so much debt? The only reason you would buy a company with so much debt is if you have assets that you can sell off. For instance, say there's a casino going bankrupt in Atlantic City, and then in that situation, you're able to find someone that will buy it, and then you can sell it or whatever, because you have bankrupt properties. But in a car company, there's really, nothing to salvage here, for so whatever. It's really, never, like I said, I'm repeating myself, I've never seen anything like it in the stock market, a figure like this that, is able to garner so much attention. But the stock wouldn't be where it is without his PR campaigns. There's no doubt about that. He is a master at PR and getting a lot of people to believe in him. And the flip side, though, one of the reasons this stock is up 7% today is that this is the most shorted stock in the stock market. There are more shares short, more money short on this stock than any other stock, and that makes it prone to big short squeezes.
Mike, anything else you wanted to throw in today?
Yeah, I think that gives a good overview with regards to the stock market. There's not really, I think, a whole lot happening. We're in a really low volatile situation, and we'll get back to that in more detail next time we talk.
Mike, thank you so much.
Thank you. Good talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.